Yo, what's up, everybody? Welcome to Black Diamond FX. And tonight we will be talking about standard deviation projections. All right. So before we get into it, I have to share my standard deviation settings with you guys on the Fibonacci. All right. And the standard deviation to do the standard deviation projections, you need Fibonacci. Okay. So I'm going to show you my levels. All right. So the levels you have from, I have one, the 0.79 and the 0.62, which are my optimal trade entry Fibonacci settings. I have the 0.5 and the 0. Okay. Now for the standard deviation, you're going to need the -1, the -2, the -2.5, and the -4. All right. So you guys can write that down or take a screenshot of this. Okay, take a screenshot right quick, or I can pull it up for you. Hold on 1 second, and you can take a look at the settings, these settings. Okay, so these are my settings for my Fibonacci. All right, and you can make it whatever color you want. All right, so screenshot this right here as well. All right, and I'm going to show you guys how I use it. Okay, so let me delete and turn this back on. All right, so before you start with standard deviation projections, normally I look at market structure or order flow or whatever you call it, and just kind of see what direction we were moving in. So I mean, looking at this right here, you see we have been going up. Now look like this is the 4-hour chart. So we have been going up. 4-hour still is still bullish. Okay. But see how these highs are being respected right here. And this last low has been broken. All right. So I'm more inclined to believe that we're turning bearish right now. All right. But I like to look at the hour. I like to go off of the hour and the entry on my 15-minute time frames. Okay. So what you're going to look for is this. All right. So let's go to over here because this is a nice clean one. So what you're going to do is you're going to look, see how we have the Asia session, right? So we know we have AMD, accumulation, manipulation, and then distribution, right? And that's pretty much how you use it. But what you're going to do is use it on the manipulation leg. All right. So see how you have this low right here, right? And this was the last high created that led to this manipulation low. Okay. So what you're going to do is you're going to take your fibs, standard deviation, and you're going to go from the low, because look, this low broke this structure. All right. This low broke structure. And that's what you want. That's manipulation. And you're going to go back to that previous high right there. Okay. So now you see we have our -1, -2, -2.5. The -2 and the -2.5 is the area that we will be focusing on. And if you look over to the right, you can see how we get that reaction right in that -2.5 area. All right. And what you want to do, you want to look over to the left of the chart and see an area where liquidity may be that may give us an idea of where price is going to go. All right. So if you look, we have liquidity at highs, we have liquidity at lows. So you see we have this high right here. Okay, look, it ran through that. And we also have this high right here in between, both of them in between the 2 and the -2 and the -2.5 areas. And look, see that right there, boom. All right. So once you find your areas of liquidity that are potential targets, then you're going to wait for an entry. Okay. So you want price to either come back to an order block or a fair value gap somewhere where price came from. And if you go, you can see we have fair value gap, and so we have this fair value gap. Now you're going to find that a lot of times, well, what I found is that a lot of times those fair value gaps gets respected. Okay. And you probably can take a lot of trades off of those fair value gaps. All right. See, fair value gap. But this one dipped a little bit below into, let's see, this block, the order block right down there. Okay. So see how I tapped it? So either or, you can take either or. All right. And then your target, you have your target. Okay. Your target, either this high, liquidity at this high, or liquidity at this high as well. All right. So let's look and see if we had taken this trade and look at your risk to reward was also pretty good as well. So say we had taken from here, the top of this area here. All right. Let me right, put my stop loss down here. It's about 9.8 pips. Let's just say 10. Bring this over here. Bring this, if we were to target this one, 102.9. Or if we target this one, 113 pips right there. Boom, see that? And then once price get up here and it starts reacting, you start seeing a reaction, then we can possibly look for a change, like a reversal or like a pullback or a retracement, something like that. Now the -4, if this would have kept on going, busting through there, then we probably could have took a look at the -4 and look at the -4. See? So this may still go up because look what we have up here. Right around, we have liquidity right around the -4 area. Okay. Although it's a little bit above sticky, no sticky keys. All right. Although it's a little bit above, still, and let's see what that profit target would be, about 168 pips. Okay. So you can go for this one at the -4, but me personally, I stick in between the -2 and the -2.5 simply because you still get over 100 pips. All right. But you wanna set it, you wanna set your standard deviation fibs on that manipulation. All right. And once you put it on that manipulation, it's gonna show you. Okay. So let's try to find another one. Let's see. Let's look at GBP, JPY. Let me delete this right quick. All right. So what did we get here? See, here we got the manipulation leg right here coming out. Boom, going up with the structure. Okay. So if we put our Fibonacci on, boom, to there. Okay. Now we didn't quite get up here. Okay. Look at the -2. Look at the -2.5. All right. That's fair value gap up in there. Okay. So it quite possibly could go up in there because as you can see, structure is up. And on top of that, you have this little small fair value gap right here. So it's possible. And let's see, look, we have like a little small liquidity break right here below these lows. And then look what we have right here. So let's put another standard deviation from this liquidity grab to there. And let's see how they line up. Because a lot of times when they line up like that, okay, we can find something. So look, see, we have this -2.5, -2.5, -2, -2. All right. So we can probably find something up in here. Let's see if we go, let's look at if we go up to the 1 hour, okay. I would say, okay, look at this. Now I want y'all to take a look at this right here. See, we got this fair value gap here, and then this fair value gap here. See, when they overlap like that, it's called balanced price range. Okay. When they overlap. So what you do is you take the small area of it, and then that's where you look for your target to go to right there. So that's where I would probably look to take my entry to this area right up in there where these fair value gaps overlap right there. That would be my target. All right. So looking at it, all right. Now, let's see. I want to take this off right quick. take these off, and let me turn off my Asia session. All right, because I want to show where could we get an entry? Okay, so if I put on, now I can see this fair value gap here. All right, plus order block. All right, but let's take a look. Look, fair value gap here, right there. Okay, so I would probably target anywhere up in here. This is in discount. Okay, this is in discount. All right, and if I put my fibs on and I look for my optimal, look, see it falls right in my optimal trade entry between the 0.62 and the 0.79. All right. So I can probably look for a trade from here, anywhere from here to down here. Okay. So what I would do is put my long position tool, boom, and I'll set it to down here at the bottom. Now it's 25 pips, but at the same time, remember the pattern we want to see is this. We want to see something like, if we don't get a spike, an impulse spike, we want to see something that looks similar to this here. Boom, 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 and then boom. All right. And then see how we got this breaker structure here? It'll be similar to this one. So you might be able to put another one on there and then see how it line up. Another standard deviation, like from here to here, once it gets in your zone. All right. And then see how it looks, see where it lines up at. All right. But that's what we're going to look for somewhere down once price get back down there. All right. And let's look to see where our 2.5, 2 and 2.5. Okay, 2.5. Look what we have. We have this high right here. All right. So I think this high would be a safe target right up there. All right. So I could move my profit target to here. 231 pips, not bad. All right. So that would be my target right there. And the risk to reward is 9.05. That's real good. I like that. Okay. So let's see, what was this one? All right. So yeah, this what so okay, so this is our overlap. This was our wait, was that our overlap on the 1 hour? Yeah, that was our overlap on the 1 hour from wait, where did this come from? Hold on a second. I think it came from here to here. Yeah. All right, it came from here to here. It never quite reached up there. So what could possibly happen is this might be like a little reversal, a little pullback area. All right. And then, but I'm still looking for it to go up to here. I'm still looking for it to go up to here. That's my ultimate target, between the -2 and the -2.5. All right. We probably will get some kind of reaction here, but I think it's gonna just break through there and go to the, somewhere up in here. All right. So I'm gonna keep looking. Matter of fact, I'm gonna leave this on just to see what kind of reaction we get. All right. And this is a trade I'll be looking for in the upcoming week. Definitely, I'll be paying close attention to it. All right. So that's GBP JPY. Let's look at one more. Let's look at see what GBP CHF looks like. Okay, so remember we go to the 1 hour chart. All right, and we looking at structure. We want to see that liquidity grab. Okay, so see we had a liquidity grab right here. All right. Now, did we get any kind of structure break? I want to say right here. Let's see if I go down to the 15. Okay, liquidity broke structure there. Watch this. Okay. So right here is where we took out liquidity. And in addition to that, see we tapped into this order block down here. Right here. All right. See that? We just tapped into it. All right. So this will be valid right here. Liquidity grab. All right. So since we remember, we got to have this breaker structure, right? And then look up also what we have. Fair value gap in another zone right here. Okay. So let's see if we put on our fibs from here to here. Let's see. Let's put it on from here to here as well, because we got breaker structure is there. Let's see how they line up in here to here. All right. So let's see how they line up. Okay. So we got -2, -2.5 there. And look what we have, right? This 2.5 right here. Look, we got -2. We got this high G-Chef, similar to the other one we just looked at. All right. So see, we got this high here. Bring it all the way over. I'm gonna bring it all the way over. Plus -2, -2.5. See, we have these equal highs right here. I'm gonna just mark it from here. All right. And we're gonna bring that over. Now it's a little bit above it, but it's still close enough to it. All right. It's a little bit above it, but still like 1 pip, 1.1 pip over this second standard deviation projection. All right. So we can target either one of those. So let's take a look. Okay. So we know we can target either one of those. Now let's look for a potential entry. Okay. So we have nothing but fair value gaps there. Let's go to the one. Okay, on the one, we got it. See, on the one, it tapped into this zone right here. So it could be possibly going up already. And see here on the, what is this, the 15? Let's look at the 30. 30, we got overlapping from here to here. And see, it just tapped in and is rejecting right there. So it could be on its way up. This might be a trade we can get in, or we can wait and see if we get another spike down up into down here somewhere. Okay, down into there somewhere. So what I'm gonna do, because it's gonna make this zone a little bit bigger, I'm gonna put it down to right down here. Let's see, 48. See, that's a big zone. But still, we're gonna look for that reversal. Remember that reversal I showed you guys earlier. Okay. Now if I put my long position tool on, okay, boom, boom. Tell you what, let's shorten this some. We're gonna wait for that pattern anyway, that reversal pattern anyway. But let's shorten it quite a bit to 10 pips. I'm a little more comfortable with 10 pips. Okay. So now let's look and see if we target this liquidity up here, 79 pips, or we can target the liquidity up here, 97 pips. All right, either one. Okay, either one. And then once it gets there, we can see what kind of reaction we get. Once it gets up there, we can see what kind of reaction we get. If we have a break of structure to the downside, it could be a reversal back or a pullback back down to somewhere down there. Okay. And a possible another entry. But this is how I trade standard deviation. All right. This is how I trade it. I encourage you guys to practice it, back test it, practice in your demos, back test it on as many pairs as you can. Get comfortable with it. All right. Get very comfortable with it. It works. It works very, very good. All right. These are my fib settings. All right. Once you find it, once you find your standard deviation, once you do your projections, okay, and you're waiting for your entry, just mark from from the low to the high right there for your potential entry. Watch, let me show you. I'm gonna take this off. So I'm gonna go from this low to this high. Look at that. This is my optimal trade entry. Look where it came. Boom. Right in there. All right. If I do this one, hold on, let me erase this one. All right. I'm gonna go from this low to this high up here. Low to high. Let's see, low to high, low to high. Boom, look at that. See that? OTE right in there. All right. Right in there. All right. So this is how you find my entry. You mark it from the low to the previous high for your standard deviation projections, and then from your low to this high for your optimal trade entry. All right. And that's how you do it, man. Easy. It's easy, man. I'm telling y'all, practice it. Practice it. You're gonna get a lot more comfortable with your trades. You're gonna get a lot more comfortable, a lot more confident as well. Look at this right here. I just looked at this. Manipulation up high. Watch this. Boom, boom. The -2. What we had at the -2, this low, these equal lows. And then if we mark these equal lows, look at that. Watch this. Boom, all the way down there. All the way down there. All right. Now watch this. Mark out. We'll go from here to here. Wait, this was our low. This was our low. It never quite came back into it. Let's see, maybe there was let's go to the one. I just want to kind of see something. Okay, so we had this, it broke this. Okay, watch this. Let me see. I'm trying to scroll. Shoot, now I'm getting lost. All right, right here. Okay, so check this out. It broke structure here. Broke structure. This way it was marked. It broke structure here, came back. Broke structure here. Came back into, see this fair value gap? Right here. Boom, boom. It happened quick. It didn't take a, see right there? Boom, right there. Right there. No, no, no. Wrong one, I'm sorry. Although it did do that. This one. I looked at the wrong one. But still, same results. Look at that. Boom. Broke structure here. Broke structure here. Came back down. Boom. There we go. All right. Broke structure, came back. But the only thing was the way I do my fibs. All right, so all right, no, it didn't. It would have tapped into it, right. It came right just into premium. Just into premium. All right, just into premium. All right. But sometimes it happens like that. Okay. Sometimes it happens like that. It came in just into premium. All right. I mean, and honestly, I probably wouldn't have even taken this trade because I would have been a little bit hesitant because it didn't come back to where I wanted it to come back to. All right. I would have missed it. Honestly, excuse me, I would have missed that one. All right. But that's how I trade standard deviation, you guys. All right. That's how I trade standard deviation. Go with the direction of the market. All right. Wait for your manipulation move, which will be, a lot of times your liquidity grab. All right. Wait for it to start coming back, drop down to your lower time frame, 15, maybe even 5. Market standard deviation. Okay, look for that -2 and that -2.5. See what you got there, see what kind of liquidity you got in the vicinity. All right, once you do that, look for your entry. Start looking for your entry. Once you find it, then just wait for it to activate. And then boom, you're in the trade. All right, easy peasy, lemon squeezy, let's go. All right, y'all. I just wanted to share that with you guys. If you guys want to learn even more with me, let me know. comment down in the comment section. You can join the team. Right now, I've reduced the price way down, because I want to make it more affordable for people to learn this. I understand, the times that we're going through right now. A lot of people are struggling, so I want to help more people. So I brought the price way down to like $500. So for $500, it's a one-time lifetime fee. You guys can join Black Diamond FX and learn, trade with us, and grow. All right. And like I said, if you guys are interested, message me down below. I can send you guys an email or email me. You can check out my Instagram, Black Diamond _ FX. Send me a DM on there and I'll get back with you guys. And if you like this video, please hit the thumbs up, hit the subscribe button, leave a comment down below. Tell me what you think, and I'll talk to you guys later. All right. Y'all, everybody, have a great day. Thank you.